Welcome to my channel SECURITIES Education. I am CA Gayatri Sengupta Shetty and today we are going to discuss about SEBI, Securities and Exchange Board of India. This body was first formulated in 1988 on 12th of April, but it was at that time a non-statutory body by the Government of India, right? It is the apex or the regulator of the stock market in India. This SEBI has the work of regulating the stock market in India. It was formally constituted on 1988 by the Government of India as a non-statutory body, but it came into effect 1992 by the Act of the Securities Exchange Board Act 1992 passed by the Parliament of India. Now we will study about the members of the SEBI, Securities and Exchange Board of India. The chairman is appointed by the Union Government of India. Then we have two members from the offices of Union Finance Ministers. Then one member from the Reserve Bank of India, and 5 members will be nominated by the Union Government of India. Out of them, at least three of them must be full-time members. Now we will discuss about the powers of SEBI. The powers of SEBI are 3: quasi-judicial, quasi-executive and quasi-legislature. Let's discuss one by one. Why quasi-judicial? We mean SEBI has the power to pass judgment in relation to any fraud or any unethical practice. And second, then we have quasi-executive. According to this, it can see that the implementation of the regulations and judgments is done, and if anyone is violating that, in that case they can also take legal actions against them. And then third is the quasi-legislature. According to that, they can frame rules and regulations to protect the interest of the investors, like what are the requirements of disclosure, what are listing requirements. All these things can be done by the SEBI. These are the 3 powers which is practiced by SEBI. Now we will discuss about the functions of SEBI one by one. There are 3 functions that SEBI is performing. The first is the protective functions, the second is the regulatory, and the third is the development function. Let us do one by one. First is the protective functions. So protective functions, what does SEBI does? It sees whether there is any insider trade, prohibit the insider trading in securities. Second, prohibition of any unfair trade practices. The second is the regulatory functions. The regulatory functions are first to see whether the working of the stock market, regulate the working of the stock market as well as the other securities markets. Then we have to see how regulate the functioning of the venture capital, mutual funds and other schemes, and also regulate the working of the depositories, participants, and then we have the intermediaries, then the foreign institutional investors, and other intermediaries also, participants, custodians of securities, the regulation of those working of them. Then we have the regulation of the see whether the acquisition of the shares are done perfectly or not, and whether takeover of the company is done improperly. And the last, to raise inquiries, raise inspection and any information if required by them. So these are the regulatory functions. Then we have the development functions of SEBI. Development functions are 2. First is the development and training, education of the investors. First development work is the imparting education for the investors and training of the intermediaries of the securities market. Then what we have to make a self-organized or regulated market. These are the 2 development functions by the SEBI. So we saw there are 3 functions performed by SEBI. One is the protective, second is the regulatory, third is the development functions. So these were the functions of the SEBI. Now we are going to discuss about the objectives of SEBI. SEBI has been made to protect the investors. The main goal of SEBI's establishment was to protect the interests and the rights of the participants of the stock market. Second, we have the prevention of malpractices. It is the aim of SEBI to see whether fraudulent or fraud relating to stock market trading is conducted or not, and to see that they are prevented. Then the third, to maintain the proper functioning of the securities board as well as the stock market, capital market effectively. Fourth is the maintaining of the balance between the self-regulatory and the statutory regulatory functions of the Securities Board. And the fifth is to see whether there is a code of conduct has to be established in order to protect the interest of the investors and the participants of the stock market. So see, these are the objectives. So we can conclude by saying that Securities and Exchange Board of India, SEBI, has been the authority to regulate and protect the Indian capital market and also to protect the interest of the investors in the capital market. Thank you.